putting the spotlight on in today's big story is Wipro. Now, you'd remember there was an acquisition announced by Infosys just a few days prior, and now Wipro announced an acquisition yesterday as a digital transformation solutions unit. But the stock is still under pressure. Rima, the acquisition seems to be fairly okay, but what's causing this stock to be under pressure? It's not like its stock has run up too much.
Well, earlier this week, most of the IT stocks were higher. But the reason is the acquired company, DTS, it's called Digital Transformation Solutions, has had flat revenue growth for 3 years in a row. Calendar year 2022 to calendar year 2024, revenues are unchanged at $315 million. That's reason number one. Secondly, the acquired company also has perceived lower margins. Throw that in with the integration costs because there are so many people on site where the wages are higher. They're not staffed in India. So the company is saying that the margins of Wipro could be impacted negatively by 50 basis points on the back of this acquisition. That's reason number two. And third is HSBC says the valuation gap between Wipro, because historically it used to trade at a discount, right, versus peers is at a historic low. And look at the one-year return of Wipro. I mean, the entire IT pack is down, but Wipro is down 5%, less than, some of the peers. So the acquisition actually is a good acquisition. It bolsters their capabilities, very opportunistic buy. It's ticking all the right boxes, but these are some reasons why the stock is weak.
And multiple reasons, Rima. But so do we perceive that in this demand, and there's no taking away from the fact that the demand environment is weak, but does this mean that we saw one earlier, we've seen one now from Wipro, but do we anticipate more such deals to take place? Because now you would feel like, okay, demand may be weak, so let's at least aim for growth, is what you had earlier mentioned as well, looking for growth. So more acquisitions like this in the future?
I think so, because growth has been absent now for second or third year in a row. Even this year, look at Infi's guidance. It's 1 to 3%, right? There is no growth. So companies are looking at ways to bolster their growth. Now, this is what Wipro's acquisition does. They're saying in the first year, because it'll close in December, so you'll hardly get, 1 quarter benefit. It can add 0.8%. Next year, you will have 3 quarters of incremental revenues. That can add 2.1%. But in a nutshell, about 3%, once it's fully integrated, is the revenue contribution of this acquisition. Also, Wipro, when we spoke to them in July, post the Q1 numbers, very categorically, we asked them about growth versus margins, right? He said growth will be our number one priority. And it's not just Wipro, right, which has made this acquisition. Look at Infosys. I think just in August, they had acquired an Australian IT company for about $150 million to expand their cloud solution offerings. Prior to that, they acquired Missing Link, they had acquired MRE Consulting, which basically is in the energy consulting space. But in a nutshell, you are seeing companies looking to up the growth now because growth is missing otherwise.
Indeed. So now looking at inorganic ways now to bolster their growth prospects. So this acquisition, of course, is looking to strengthen Wipro's ER&D capabilities. But why ER&D? Is it it's not their largest vertical, right?
No, it's not their largest vertical. But ER&D compared to the traditional IT services companies is higher growth. That's reason number one. Two, ER&D companies are very strong in, say, automotive, right? You want to transition from ICE to EV, you want to transition to autonomous vehicles, you want to focus on, in the aerospace. These are companies heavily in the ER&D companies, that their clients are heavily investing in technology so that they could upgrade themselves. So which is why here tech spends continue to remain higher. Traditional IT services are getting commoditized, especially with generative AI. It is in a way seen deflationary. ER&D deals are higher value in nature, right? Imagine an auto company, you want to move to EV, you want to move to the autonomous platform, you want to make sure that your car has all the software that it needs. It's a software on wheels. You will need to make those spends. So generally, ER&D spends have been higher. The companies have been higher growth. Also, there is a cross-sell opportunity. For instance, Wipro, because the acquired company has a Samsung, it's ultimately a unit of Samsung, right? You can cross-sell to Samsung. It opens out South Korea as a market for them. And also, many of these companies, right, they have delivery centers globally. So you have access to talent. So Wipro will take on board about 5,600 people on the back of this acquisition. And I just want to quickly leave with you with one plate about how your traditional IT services companies, the large ones, have been making ER&D acquisitions too, right? Wipro, this DTS, the Harman Connected Services. Cognizant spent about $1.3 billion to acquire Belcan last year. Infosys acquired Intech. HCL Tech acquired in July of 2023, so 2 years back. So companies have been upping their ER&D exposure.
So the ER&Ds is the Persistence and the Tata Alexis of the kind, right?
The KPITs of...
KPITs of the kind, indeed.
So right now they're going through a tough phase, right, compared to the high growth era, which is why even a KPIT Tech is not growing as much, or, L&T. That said, still KPIT's growth is higher than, some of the peers. It's just that on a very high base, things are slowing down. But at some point, once the situation improves, macro, the expectation is ER&D tech spends will come back. This is a cyclical.
And once you get used to the higher growth levels, you can't necessarily digest the mid-teens or the
And things are slow, right? There is a lot of uncertainty. So things are slow, but the expectation is that it will pick up at some point.
At some point, yeah. Sooner or later, is that the hope, right? And well, indeed. So Wipro is the big story of the day. And as Reema was highlighting the key factors and why the deal is advantageous for the company, the stock has recovered slightly from the lows of the day, still though 0.3% lower, and it's traded in a very narrow band as of today's trading session. So that's the big story of the day. Wipro, the acquisition that it announced, and brokerages too mostly have a positive read-through for Wipro. Get you a quick chart check now, considering the